Anybody? The VIX.
I forgot.
Come on, guys. This
Volatility index.
say it again, please.
Volatility index. Index.
That is exactly correct. It's the volatility index. Why is that important to us as traders?
Because it helps us to understand what's going on in the market, how the market is moving, which direction is moving, what the buyers are buying, what they're interested in. And so if the VIX is high, then we know that the market is going to move in one direction. If the VIX is low, then we know that it's going to typically move in another direction. And it just gauges which way we go.
Okay. I agree, for the most part. If it's high, typically, right? Typically, we'll qualify that statement by saying typically, the equities market will sell, right? We just talked about what equities markets are. So if the VIX is high, volatility index is high, people generally sell off the stocks. All right. If it's low, then generally speaking, there's a better chance for the market to move to the upside. People who trade the equities markets are they want safe. They don't want to they don't have an appetite for risk. So when there's uncertainty or people are scared, you throw the word recession or depression or war, a lot of times that's going to trigger a sellout, right? So if you didn't know what the VIX is, hopefully you wrote down what the VIX is and why it's important, especially if you trade the US 30 or the NASDAQ. So let me ask another question, and you may or may not know. What's a high number for the VIX? And this number changes, I guess. What was considered high last year might not necessarily be high this year.
So at one point, it was, and I think it changed recently, but at one point it was like 24 and below, like 17. I was like between 17 and 24 was on the lower end. And then above that was on the higher end. But if it got to 32, then that's when we would start seeing like recession and things like that.
Okay, I can agree with that. I think now, if you look, the volatility index prints is VIX. So right now, the VIX is at 27, right? And if you look at, where it came from, this is during the pandemic. Then there was the quantitative easing, QE, quantitative easing. The Fed printed all that money, right? And then June 2021, it started pushing back up. And right around this January timeframe, we have QT, quantitative tightening. We're taking money out of circulation by raising interest rates. So this volatility index, now the highs are in the 30s. There are a few, quote unquote experts out there that say it could get as high as the low 40s. And if it gets that high, it's a catastrophe. So you kind of have to follow the talking heads because they know a little bit more about it than we do as novice, right? But you're going to trade those equities markets. I would make myself as knowledgeable as possible, right? That way you have an understanding of what's moving the market or why it's moving the way it's moving. All right, it's one thing to be able to mark up points of interest on a chart, but it's even better to have a directional bias once you mark those interest points up. And this helps you as a trader because if the market does not respect your analysis, if it's not doing what you think it should be doing, then you probably shouldn't be involved, right? It's kind of like you going to the store expecting to pay one price for some shoes or your purse or your favorite perfume or cologne or whatever, and you get there and the price is out of skew. Maybe you don't buy it that day. Maybe you find out, hey man, what the heck is going on with these prices, right? And it's also a determining factor. When you as a trader make a decision to buy or sell, we are buying and selling the value of that currency, right? And we need to make sure that we're getting that currency at a discounted rate, right? We don't want to pay premium for the value of that currency, because that's how you end up being liquidated as a retail trader. Banks don't buy and sell currencies at the premium. They buy and sell currencies at discounted rates. So, if you understand that, as a trader, you will be on the right side of a lot of the moves. Now, we all get fooled, sometimes real-time situations trump what we've read. So just understand, if you don't want to be liquidated, you want to get your currency at a discounted rate. So let me ask another question. What is a discounted rate? What do I mean by that? Come on, y'all.
Does that refer to the fib levels that are either below the fifth, like the golden zone? Like starting at 70, what was that, 71%? That would be
78.6. All
78.
right. So
That would be
you are
discounted.
correct. We measure the discounted rate using the fib. Anything 50% or higher is considered a discounted rate. And that is why we use our fib. Price could pull back to the 50 and then keep going, or it could pull back deeper. So understand this.
I have a question
Yes, go ahead.
regarding the VIX that we just talked about, or you just mentioned. Since this is my second time hearing about this VIX,
Mhm.
how would I relate that to trading US 30? Because this VIX right here is showing the S&P.
Well,
I
so
don't know, is there one
S&P,
also extra for
yeah, the
US
S&P is
30 or?
the S&P is an equities market as well.
Mm-hmm.
All right, any U.S. market is an equities market. Equity is like something that you can own, right? Shares of stock that you can own. So, I mean, same principle applies. If I
So
were
would I
you,
actually, before I start trading, let's say US 30, I would look at this one kind of like looking at the Dixie or?
well, exactly. So you're gonna do a complete analysis, right? You look at your charts the same way you've been looking at your charts. But if you look at the VIX, the volatility was high 2 weeks ago, right? Last week, the volatility dropped and the market rose, right? So there is a negative correlation between the VIX and the market. So if you understand that, then you can kind of understand what the sentiment is. Like, this is just an added piece to your analysis, right? You don't have to base your entire decision off the volatility index, but you have to understand where we are, right? In terms of what the high number is and what the low number is, pretty much.
So the volatility being high is like kind of like the price level or
No,
just.
it's not price, it's people's fear, right? The fear level. When people get scared, they take their money out of equities. They don't want to lose money. So let me give you a story. Back in 1988, you know, and you know, y'all don't have to ask me how old I am. You know, I'm old. Back in 1988, or maybe it was 87.
It was 87.
October of 87, the stock market crashed, but it didn't crash like it crashes today. Like back then, there was no stop button. You can take everything out, right? So that's what people did. You know, they when they got scared, everybody, there was a run to the Charles Schwab office or whatever brokerage firm. You know, you couldn't just do it from the internet back then, right? You had to call, but people flooded the system with sell orders. You know, people were trying to get out of the market, and back in those days, you get a ticket number or whatever when you put your sell order in, and you didn't know what price you were going to get out of it. So let's say you had 10,000 shares of ExxonMobil. You know, well, whenever there's a market crash or there was a serious event, you know, everybody could take everything out. And you might wake up the next morning and you got out of the market, but you sold, you know, $15 lower than you thought, right? So they had to come up with a system that where they can kind of press a stop button, right? Like the market can't crash like it did in 87. Ain't that right, Sean? With the advent of computers, there's a level that they won't let the market sell off like it did back then. So 1,000 points, that's nothing. But back then, they tanked, you know. And if you had held, maybe that next week the market rebounded, but most people didn't hold.
Yeah, you're right. You're right, Watu. They got a stop button now. So I guess in theory it could crash the way it used to, but they usually hit the stop button.
Right. It would take several days now for it to do that.
Yeah.
But that's why you want to monitor these tools that they have out here. Does that make sense, Elfie?
Okay. I guess, I'm not sure. But I'll look into it. Thank you.
Okay, yeah, that I would really suggest, you know, a lot of if you don't understand these terms or these tools, write them down. And this requires you to do a little homework. This is kind of like you're back in school, and you know, the goal is to give you an introduction, and then you take it and you run with it from there, right?
Yes.
Some people will never use the volatility index, so they'll never look at it. They'll never pay attention to it. Other people, you know, who trade the equities markets will find value, you know, in that tool. But it's another tool that you can incorporate into your analysis, right? And you'll get a better understanding of what to expect. You won't be shocked, you know, when you go in the market and it's choppy or whatever, right? So this just gives you the ability to be a more informed trader. And it takes, this takes the casino out of the Wall Street, you know, like a lot of y'all just go to the market and gamble because you don't even know what's going on. And it might have worked for you, but like my boy Oliver Velez says, anything that happens before you gain experience is called luck. So consider yourself lucky. But these are just tools that will help develop you, you know, and develop your decisions as a trader.
Yeah, a good example of them hitting the stop button recently, and it wasn't the entire market, but remember when Robinhood, when everybody was pissed off?
Yeah, they was pissed. Yeah, I remember.
Yeah, because someone hit a stop button where people couldn't sell their shares because they didn't want.
Yeah.
Yeah. So
You guys remember that?
Yes, that was like, yeah, last year or a year. It was during LLA, I remember.
Yes, pretty recent.
Yeah. So, back in the day, there was no ability to do that. And it would have got real ugly real quick. But
Yeah, Robin Hood would have went under if there wasn't
yeah.
a stop button.
Yeah. And that's why they have to have a certain amount of capital, and a certain amount of financial backing, to become a broker and all that in the United States.
Yeah,
Why
not
you
to
have to
beat a
regulate.
dead horse, but remember Trading Places, when the guy was like
Yeah.
turning machines back on?
Yeah.
That's essentially what happened. There was no stop button in the 1980s. So
All right. So you guys got that?
Yes, thank you.
No problem. Okay, so we talked about the VIX. We talked about equities market. As far as fundamentals are concerned, what's the fundamental driver of the Forex market?
Interest rates.
Yeah, for you betting 1,000, girl. All right, interest rates. Interest
What'd you
rate.
say? Okay,
What's that?
I didn't understand what you said.
I said you are batting 1,000. That's a good answer. Interest rates
Oh.
are the fundamental driver, which means if there's nothing else going on out there, interest rates will move the market, right? So I'm sure everybody is aware, maybe you guys aren't. Everybody's raising interest rates, right? Or are they? Who's not raising interest rate? Let me ask the question that way.
Japan.
There you go. Japan is the only major currency that's not raising interest rates. You should understand that, as a trader. There will be, every country will have to answer for either their raising of interest rates or their unwillingness to raise interest rates, because these interest rates will have a direct impact on their financial situation, going in the future. You guys know that Chairman Powell had to testify this last week, right? Did you guys understand what he was talking about? Did y'all hear his testimony, or did you read about his testimony?
what do you say, man? What do you say?
Mark, you watched it. Who didn't watch it? And who didn't read about it?
I didn't, man. What do you say?
Me.
I didn't watch it or hear it.
All right, shame on y'all.
I didn't.
Shame on y'all. And y'all gonna go in the market next week and trade like
I know
that.
he ran his head, but I don't know what he said. What do you say, man?
So basically, in this country, everything is politicized anyway. You're either on the left or the right. So there's two different factions in the United States. There are people who believe that the Fed is raising interest rates too fast or too much. And then there are people who believe that we don't raise them enough, or we didn't raise them fast enough. And I think, hindsight will say that we didn't raise the interest rates fast enough. We should have raised them faster. And inflation is out of control, but that's water under the bridge. Like this is what the Fed is trying to do is the equivalent of patching up a bullet wound with a Band-Aid, right? You don't print $6 trillion, $7 trillion, and then expect a smooth recovery. It just is not going to happen. We've never closed the world economy before and reopened the world economy. So this is all trial and error. And you know, the thought process may differ between different economists or different experts, but the ones that we have in charge are making the decisions that they believe are the best. So basically, he was questioned about the raising of the interest rates. You know, we raised the interest rate 75 basis points. Everybody kind of wants to know going forward, how are we going to raise interest rates without crashing the economy, basically, right? We are trying to land the plane, you know, without maybe without rudders or whatever, right? Everybody wants a soft landing. They want to make sure we're going to have a soft landing. Well, the Fed, you know, is saying that you know, a soft landing has never happened before. You know, it's probably not going to be a soft landing, right? We're probably going to raise interest rates right into a recession. But it's basically two bad choices, right? You either do not raise interest rates into a recession, and then you have inflation that runs wild, and we're all paying $10 for a gallon of gas and $5 for bread, $8 for milk, or you raise the rates and you slow the economy down, and you suffer the consequences of a recession, right? So what is a recession, right? Like, do you guys know the definition of a recession? I know we've covered that, you know, in this meeting, but I just want to make sure, I want to check for understanding. Like, do you guys understand what a recession is? A recession, you know, if you Google it and look it up, it will say that it's basically a shrinkage of GDP for 2 consecutive quarters, right? What is GDP?
Gross domestic product.
Yes, Elfie. Elfie, you got it going on. But what does that mean?
However much the country is producing and selling and stuff like that.
There you go. Okay. Elfie, they have a better school system in Germany, apparently, than they have in the US. But
Oh, they do. They do.
all right. So we produce, like every country produces, right? And unfortunately for everybody, or maybe fortunately for everybody, we don't all produce the same things. So we have to depend on Brazil for sugar, right? We have to depend on China for clothing. We have to depend on Japan and Korea for electronics. They depend on us for corn and wheat and steel and that sort of thing, you know, maybe concrete. So we all have to produce and be able to take our goods and sell them or trade them in the open market. So that's what drives the big thing called the economy. So let's talk about these interest rates. When you raise interest rates, the value of your currency is going to rise, right? Against the value of somebody else's currency. So when you start doing these trades, it's going to offset the balance, you know, the balance of trade. You know, all things are not going to be equal. You know, we might trade with Brazil, you know, with sugar, but the value of their currency is dropping and the value of our currencies growing, and the balance sheet is going to be off the mark. Now, most of the time, you know, you don't have a big uproar. You know, really, I hadn't really heard of a big uproar until Trump came in office. And you know, he was trying to redo all these trade deals. And I'm not saying that that's a bad thing. It's just I had never heard anybody you know, cry like that over the trade situation. But I'm gonna tell you what the interesting thing. This right now, the situation we're in right now, where we have recession fears, but we have high employment. Like, if you look around, everybody's hiring, right? And we can't, like, we don't have a high unemployment number. Eventually we might have a high unemployment number, but the jobs that need to be filled, man, are the jobs that nobody wants. Nobody wants to go pick, these vegetables or till the land or all the other stuff. We want high paying jobs or high end jobs. But the jobs that we need filled are ground level jobs or, dirty work jobs. A couple of years ago, we had a healthy immigrant population that took care of those types of jobs, right? So when you go to your grocery store or you go to your clothing store and things aren't on the shelves, it's because a lot of these positions aren't filled. Like that's going to be the byproduct of closing the borders. You're going to pay more for things, and some things aren't going to be there. Because we're too good to do certain jobs. I mean, that's just how it is. Most of us aren't going to work fast food. Kids maybe. So back in the day, I mean, you had your kids, but you also had immigrants or hotel workers or whatever, right? You go to your favorite hotel, maybe they're out of towels or maybe, the laundry isn't the way it used to be. Maybe the buffet doesn't taste as good or the lines are a little bit longer. All of these things are basically built in things that we're going to have to pay more for or do without because we don't have the same workforce that we had. And it's thanks to us, being more restrictive, at our borders. So just keep that in mind, and you can understand the challenges that we have. If you listen to these talking heads, it's kind of like it's a phenomenon that we don't have these jobs filled. Like everybody's always, surprised when the jobs report comes out and we're maxed out, like we don't have a high unemployment rate. Now, with that in mind, I did read something this week that a lot of the mortgage companies laid off a lot of people because people aren't buying houses with these interest rates climbing. So maybe this will be the first trickle down effect to start the recession is laid off workers. It won't affect everybody equally, but if you're in a market or if you have a job that requires people to go out and spend money, then you might be affected more than somebody else who maybe isn't in a position that requires people to spend money. If you're a medical worker, you probably won't be affected as much, as somebody in sales. Okay. So we understand how interest rates affects the overall trend of the market. What else affects these markets? Well, obviously war, right? What's going on in Europe? Did you guys catch the European Central Bank that controls the German currency or the euro dollar? Did you hear what they said? They're going to phase 2 because Russia's not giving them the same amount of energy. Did you guys track that?
I just heard that Russia was, like you said, giving less, like 20% less, I think now, gas.
Heck yeah. I mean, that's going to affect you guys. You know, if you trade in euro, that's going to affect the euro. I did see where they said they were looking at a 25 basis point increase on the euro dollar. You know, I don't really know how that's going to impact the euro because you know, 25 basis points, if we would have raised interest rate 25 basis points, the dollar would have, it would have dropped, right? Because people expect us to raise them more. The euro dollar, 25 basis points, may be okay because it's a wartime situation and you're raising interest rates. So maybe the euro will respond better. But it's the weekend and everybody should have a plan. You know, this is where you come up with your plan that you're going to execute in the coming week, right? Like, this is the time where you choose, you know, which currency or which 2 or 3 you're going to trade, and you go to the charts and you mark up the charts and you pick a price point that you want to execute your trade at, right? And you base that off of the fundamentals that you understand, right? And the technicals that you see on the price chart. It should never just be, oh, I'm gonna look for the order block, I'm gonna get in the trade. Yeah, that's a piece of it. You know, identifying the order block, understanding where you can possibly enter, but you want to understand, hey man, is this a long-term move, right? Or is this going to be a choppy move based on, you know, the news events or the situation surrounding that particular currency, right? Everything that I've read or I've seen this week, you know, has been a play on the risk appetite. Like Thursday, people didn't have a risk appetite. Friday, they had a risk appetite. And then the equities market shot up 1,000 points. So if you understand, or if you can take your clues, then maybe you can be a part of some of these moves. Now, on the technical side of it, you know, you knew that there were imbalances that needed to be filled, you know, on the weekly, that the price needed to go up and hit. Don't be fooled into thinking that we're going up from here, because that's just not the case. You know, it's I think it's still a couple more points on the chart for US 30 that we can go a little bit higher, but you know, overall we're still moving down, right? All right. That took about 45 minutes. Do you guys have terms or things that you don't understand that you want to talk about before we get into these pairs? Anyone? Bueller? What are you guys trading this coming week? Or is that what you're here for? Because you don't know what you want to trade. DAX and the Dow. Are you trading? Do you expect them to go up or down, Elfie? Monk, what are you trading? Rhonda, what are you trading? Monk, you trading AJ. That's a good one. Do you expect it to go up or down? Why do you expect it to go up? Why don't you pull up a red photo for me? What does CPI mean, guys? CPI. Prince.
Consumer price index.
Okay, but what does that mean? What is that? What is that used for?
Inflation, to measure the inflation.
That's exactly correct.
Yes.
Why is that? Why is that important to you?
Measures consumer spending and when people will, the rate of spending and.
Are you
when
reading the
people will cut-
definition? Are you
I'm
reading?
sorry.
Are you reading the folder? Or you read? Or are you telling me what that actually means?
I was telling you what it meant. I'm not reading it.
Go ahead. Go ahead. I'm sorry. Go ahead.
No, it just measures like the rate of consumer spending and kind of gauges when it'll go up and down.
So if CPI data is better than expected, they have a projection. If it's higher, what does that mean?
That consumers will spend more, and then if it gets lower, then consumers will stop spending.
Wait. I disagree with the second part.
Oh, well, spend less.
So when you say spend more, you mean, what do you mean by spend more?
It's like when people are in fear of a recession, then at some point they're gonna decide, whereas before they may have spent more freely, at some point they'll start thinking twice before they spend on certain products that aren't just necessary, essentials.
Okay, so all right, I think CPI is referring to how much you have to spend. So if you have a baby, you got to buy milk. Or you had kids, you got to buy bread, you got to buy gas, right? The CPI data is telling you what you're going to pay for that bread, that milk, that gas.
Yeah.
So that's what they mean by spend more. You're going to spend more, for these basic goods and services, but they mean spend more. It's going to cost you more, right? For the same package. So before the pandemic, maybe it cost $150 a month for you to buy groceries. No, that doesn't happen now. Now it might cost you $300 a month. That's a direct impact on inflation, right? And when you have high inflation, what tool does the Fed have to combat the high inflation? Like this should
Raising
be,
interest rates.
there you go. This should be second and third order for you. So when you see, let's say you're trading the yen, or you're trading the Australian dollar, the New Zealand dollar, and their CPI data comes out, and that number is higher than expected, then automatically as a trader, you understand that that's going to push the currency up, because there's an expectation that their central bank should be raising interest rates. It's also why if they don't raise the interest rates, that currency will start to tank, because investors don't like it. Like they know that you're supposed to raise the interest rates. So when you do something that's not orthodox, people take their money out, because I don't want to lose my money because you're experiment. So y'all understand that? Like these should be second and third nature to you if you're trading. Like when you see these news events, and in other classes, they used to say, hey man, if you see a red folder, don't trade. That's not necessarily the case. Just understand what that red folder means to the currency that you're trading. So everybody has CPI data. It means the same thing for every currency, right? Everybody has their Fed or their central bank speaking. Listen to what they say. They're either going to be dovish or hawkish. What is dovish?
That's bearish going down,
Conservative.
bad for currency.
I agree. It's if a central bank president is dovish, he's conservative. He's not, aggressive. He's not going to raise interest rates. They're going to allow interest rates to stay where they're at, or they might drop interest rates. That's considered dovish. Hawkish is when you're the opposite. You're going to raise interest rates. If somebody is saying that this central bank is hawkish, then that currency is probably going to start moving up. If they're dovish, the exact opposite. All right. So that's what that means. So if you look at this week, can y'all see my screen?
Yes.
I have a question though.
Okay, go ahead, Mom.
Yeah, so those G7 meetings, right, is going to affect the economy too, because of the countries that are, they said it affects the financial markets, even though they influence it sort of at the meetings.
Even though they what?
Even though they're not directly related to the financial institution, but what they discuss
Right.
affects the markets. That's what I was reading there. And I see Japan is one of the countries there, even though you said they didn't increase their interest rates, but they're going to be there too.
Right. Right. So it's always going to affect currency, when heads of governments get to talking, So as long as nobody says anything out of the way, then it shouldn't affect the currency that much, right?
Yeah.
Most of the time, these meetings have canned responses or canned discussions. Most of the time, people aren't going to get in these meetings and say something totally different from what they've been saying leading up to these meetings. And that's why the folder is orange instead of red.
Okay.
The meeting that really starts moving the markets is that OPEC meeting, because especially during this wartime, you never really know what that discussion is what's going to come from that discussion. 1 minute, they're not going to up production. Then, they have this meeting. Maybe there's some underhanded deals made, some financial considerations, and then they're going to raise production. So, in my experience, the OPEC meetings move the market more than these summit meetings do, right? So maybe our president goes and discusses, the future of energy. We want to be more green. Maybe that affects oil or it affects one of the markets that way. But it's not really a change from his political stance, right?
Yeah, that's true.
So that's how I would look at that. As long as nobody goes in there and says something totally out of the way, we should be all right.
Okay, thank you.
All right. So when you have these bank people talking, like I think that this Bank of England will be a interesting situation. So basically, Wednesday morning will be a volatile time in the market, because you're going to have these bank people laying out, how they see the economy and what they're prepared to do, in order to either fend off a recession or to try to ease the fears or whatnot. So maybe on Wednesday morning, you're either you tighten up your stop loss or you wait for this meeting. But other than that, I think, you know, this will be a decent trading week. And then of course, the following week, we'll jump right into to non-farm payroll week. All right, so let's talk about these pairs. Okay, was that you, Kenya? You said you was trading this or Monk? Monk. Monk, you say you trying to buy this, right?
Yes.
I don't know, Monk. I don't know.
You think it's gonna drop?
Man,
Look at the 4 hour.
man. Okay, the 4 hour. So where are you trading this to?
Up to the where you have your order block right there. Up there.
Up here?
Yeah.
I don't know, man. I don't really like this setup for a buy, to be honest. So if you're just trading it to here,
Mm-hmm.
then maybe, but here's why I don't like it. On this daily chart, I see a change of character right here. And when price was right here, it broke structure to the upside. It immediately broke structure back to the downside,
Mm-hmm.
which is saying that it needs to sell. So all price did is fill this imbalance and started pushing down. So the way I see this, and you know, this is just the way I see it. My analysis is going to be different than yours. I'm looking at this move down, and this is a pullback to the zone. So me personally, I'm thinking that it's going to push down. So
Do you think it's gonna reject the zone and go down?
I do, and maybe that's not right, but yeah, that's my personal bias. And let me see. I don't think it'll be a long-term play, but you know, there are areas down here that need to be filled. Not necessarily this right here, but and I don't know that price will come all the way down here, but you have imbalances that are going to have to be filled, and probably like within these wicks. So I can see a case for it to push down. You see this 2-hour joint. Yeah, I'm thinking to come back down to this area.
Hmm.
This order block in there.
Todd, can you please explain what you just saw on the weekly for you to determine or make your
So, all right,
order out,
let's have a conversation.
please?
So this price, at some point it broke this structure over here, right?
Mm-hmm.
And I'm basically trying to see like maybe this order block right here was the sponsor, or maybe this order block up here was a sponsor for the break structure. Price never came back to touch. It got close, but it never came back to touch and go, right? I do believe the long-term play is to the upside, but I think price needs to come back and touch and go. So on the weekly, I want to look at the monthly. I see rejection, right?
Mhm.
See all these rejection candles, price eventually pushes up. So when I look at the weekly, like this is a bearish order block. Price pushes in and falls off, but it didn't really push down, right?
Mhm.
So I'm thinking that price needs to push down further. And then when I look at this weekly, I see an imbalance. You look at this candle right here, it has an itty bitty wick, but there's an imbalance basically from here to here.
Mm-hmm.
See? So if
Yeah.
I pull out my GAN box, then my 50% of this GAN box will be, right in this area that I've already identified.
Hmm.
Now here's the deal, guys. Price doesn't necessarily have to come touch this next week, right? But it does need to fill this imbalance at some point. And because the market, has given me a bearish order block, and maybe the bearish order block was just to come back and touch the moving average. Cool, right? But all things considered, I think this market is going to push down until there's reason for it to push up, like maybe recession fears or something fundamentally that changes this direction. I think if not, if everything stays the same, I think it's going to come tap in before it pushes up. I don't think this is the only one that's moving down. I think most of the JPY pairs are retrace. Let me see. It's CAD, JPY, not one of them. So you see how you have the bearish order block? Look like we tried to fight to push up and we didn't. I think Chef JPY is an exception. And maybe USD JPY is an exception.
No, it ain't no exception.
Even USD JPY is showing weakness. Well, this is what I think about USD JPY. I think it's too early to tell because, ever since we raised interest rates, we didn't see any push up. And this chart, if you notice, it retraced to the moving average and you get rejection. So I'm thinking that USD JPY will push up. We haven't even pushed up since we raised the interest rate. It's all been pullback. So this pair I would be more comfortable taking to the upside until it starts faltering. The other pair, nah, I'm not as comfortable with, right? And here's another thing. When I just look at this chart with my naked eye, if you're an RSI or a MACD trader, even your moving averages, I know they're lag, but even they're still positive. Like they're still saying it's a buy. The green is still over the red. Now on this weekly chart, you're getting rejection, but even still, we're going to feel this wick. I think we feel the wick before we push down. So that's still going to say it's an up move this week. The exports, and quoting, I'll air quote that, have this pushing up to the 145 level, right? Way up here. Doesn't mean it's going to go up without retracing, but I think it needs to go up before it comes down. If you look at that AUDJPY pair, red over the green, that's problematic for me, especially because I also agree with that. Red over green. And this 12-hour is the only one you have the green over the red, but the higher time frames are showing sell. And if I look at this 12-hour chart, I got a high, a lower high, an even lower high, right? The lows are kind of flat, but I do think we're going to see a push down. That's just my personal opinion on it. Again, if whenever I decide I'm going to trade a pair, if it doesn't respect my analysis, then I ain't doing it. And that's how you blow accounts. When you're trying to trade something and it's going against what you thought. So if you have this going to the upside and it starts pushing down, then I wouldn't do it. If it pushes up, then and it follows your analysis, trade the heck out of it. But if it starts pushing down, I would sideline this, and maybe there's an easier pair to trade, instead of this one, right? I always try to look for my layups on the weekend. Another AUD pair that's going down, or that should be pushing down. You know what I don't like about this down move on this pair? Let me see where this could possibly be going. Bruh. I would really like to see this buy. Okay, there's a few things here. We had this swing low. We wick below the swing low, which, you know, looks like a liquidity grab to me. I would like to see this thing run up and start liquidating these highs up here. We had a break of structure. Price never went back up to that point. When we get a break of structure, we need to go back up before it sells down. So I think that we have all this area that's in play. About 370 pips that's in play, you know, for a price run. And I know this is a weekly candle, but the wick that took the liquidity always stands out to me. So I would like to see, I know this is a bearish order block, but I would like to see price push right back up. And if you look at the chart, you know, you see a schematic playing out, right? Like, can everybody see that there's like obviously some Wyckoff playing out?
Yeah.
So I really want to see, you know, price run up, especially since on this weekly chart they took out liquidity. So I'm going to put an asterisk by AC. The fundamentals behind this is what's going on with oil? Anybody? Because CAD is a oil currency.
Isn't oil selling?
Huh?
I think oil is selling, yes.
Why?
It tanked.
Why is it selling?
Recession fears and China having their shit locked up.
Yeah, recession fears. All right. If you have a weakened economy, ain't nobody gonna be out buying oil. So, you know, you can't charge $8 a gallon if ain't nobody buying and driving. So we have a temporary pullback on oil at least. So I would watch this play, right? And look, guys, this is going to be relevant for weeks and probably a few months to come. Like this trade is going to be relevant for the next few weeks. So even if I don't come back and say anything, if you're interested in that move, then you kind of have to write it down. Maybe set some alerts on your trading view, because you're going to have to come back to this so you don't forget, right? Maybe you're an AC trader, maybe you're not, you know, but that's going to be interesting to see how this actually plays out in the coming weeks. But, you know, at any rate, I think it needs to buy up to the order block, which is, I don't know, about 70 pips.
Hola.
Who's saying hola? Hola, hola, yeah.
Good afternoon.
Oh, what's up, Leandra? What's up, Dark Tank Killer? What's going on?
Good, thank you. How are you?
I'm lovely. I'm lovely.
Very well, very well. It's brilliant to hear.
Hey, y'all, this is my friend Leandra, who smashed another challenge this week.
Thank God. God's grace.
Congratulations again.
I love how you didn't reply to my messages though.
Me, reply to your message. Don't even try.
Like twice, and then I sent all the messages, you didn't reply. I feel like I'm talking to myself when I'm talking to you.
Maybe I got lost in that thread. Like it was 1,000 people on your thread.
I'm not talking about that. I'm talking about private message.
Talking about what?
Private message. Well, we'll talk about that after. How long are you staying on the call for?
We're just breaking down a couple pair. So maybe I don't know, another 20, 30 minutes.
Okay, cool. Because I'm out at the moment, so I'll jump back in later.
Right.
Well, I'll stay on, but yeah, I'll jump back in.
Okay.
See you later. Take care.
All right. All right, so gold pushed down a little bit. I still have it pushing down more to this area. It's taking a sweet time, but it's taking a sweet time along with the dollar. The dollar really hasn't moved really like I expected it to move coming into the week. All right, these are the pair that I find a lot of interest in. These CHF pairs, because they raise their interest rates. Most of the CHF pairs have been pushing down. I think Euro Chef has still a lot of room to push down. A lot of opportunity here to push down even against the greenback. All right, we rejected this order block on Friday, but I think we'll eventually push through that order block. It's about 127 pips to the bottom of this order block. But I'm looking at this area down here. Right, there's an imbalance down here that was never filled. Since price has been pushing down, I think this imbalance is a fair target to look at trying to push down to this imbalance. And that's a daily order block on UF. CAD CHF has a daily order block. A lot of room here, a lot of imbalance. You can find the 50% for it to push up. But, you know, we just talked about the CAD. So if I'm taking this trade, I can probably comfortably take it about 80 pips or so. And I will judge it when it gets towards this moving average. So although I feel like it should be able to push a little higher here. This is my golden zone, which makes sense. The golden zone and if you put the GAN box over the imbalance, might give us a better confirmation of where price is likely to wind up. This might be a little bit higher than the golden zone we looked at. Right at the top of the golden zone. So maybe you guys can target this area for a long, you know, I mean, you're gonna have to refine this stop loss. Break a structure, change of character. Maybe your entry would be lower. Y'all see that change of character? Y'all know what I mean by change of character? Anyone? Anyone? You do, you don't?
Wasn't that breaking to the downside and then immediately to the upside?
Right, it broke structure to the downside and then immediately broke structure to the upside. So price needs to return, bounce off this block, and that would be a great trade scenario. Just have to be patient enough to wait for it to return. Probably snug the stop loss up. They give you a 12% ratio on that trade, which is excellent. I'm gonna add min alert right now. AU. Okay. I got AU on the climb. The golden zone is a little bit lower than my my imbalance area up here. So this is the area of imbalance that I identified, but so it's in between the 61 and the 78. The imbalance that needs to be taken care of. So if these trades interest you, maybe you can buy it up to that position. I think the 2-hour chart had a negative order block on it. Oh, come on, man. I hate this thing. This is not gonna let me do it. Darn it. Piece of crap. I think it'll be about 150 pip move. If this goes all the way up to my POI. All right, let's look at FJ on the daily. We already talked about the weekly, how it was still pushing. Okay, I think this might sell back to the moving average, which would make sense. Since they had that dominant push to the upside. All right, the moving average is here. The golden zone is here. So maybe it pushes down to that second leg. But either way, if this thing pushes into our back into the order block, you know, I mean, we had an opportunity to sell it the other day for optimal entry. And we would have had a 7% ratio on this trade, but maybe even more than that if it comes all the way down to this golden zone. That would have been a 10% trade. But I definitely, I like this setup. It's another chalk, broke structure to the upside, broke structure to the downside, came right back there to the order block. Martha, GJ sucks. All right, there's my analysis for GJ. It doesn't even have a order block on it. GJ. Okay, weekly order block for the buy, right? I think this is fool's gold, honestly. Were you buying GJ, Martha? Anyone? Okay. I think we're gonna hover around this area. I would keep an eye on that. Was that Wednesday meeting? On the, when we said the Bank of England, we got those Federal Reserve Bank members speaking. And I think that's going to play a determining factor on which way that this thing breaks. I mean, if you want to trade it in this range, that's cool. But Wow, I didn't realize it was a 200 pip move, but yeah, so I think it's going to bounce. Maybe there are 200 pips or so in play, but I would pay attention to that meeting. What day was that? Thursday or Friday?
Wednesday.
Wednesday. Wednesday. Wednesday at 8 a.m. Yeah, I think that meeting will depending on what's said, dovish or hawkish, will kind of push this into the direction. Remember, the pound is more of a risky currency, and the yen is the opposite. So, depending on what's said or what comes out of that meeting, we might get a pretty big push in either direction. I think in the short term, we should push back down into the order block and maybe feel some imbalance in this wick. So I would look for it to push down and then up a little bit, and then whatever depends on what comes out of that meeting, whether it keeps going up or whether it pushes down. All right, EA. Everybody trading this? Bueller. All right, so a couple of weeks ago, we talked about EA. We talked about it needing a retrace. And here we go. It retraced, it touched our zone, right? If you look at it, this imbalance right here got tapped, not necessarily closed. But it got tapped into. There's another imbalance here. I don't think the price is going to get to. I need to delete all this crap down here. Okay, so we got this bearish daily order block. All right, I think we have to pay attention. To this level right here. All right, I have price coming to this order block. If we break it, then I think we're good for the sale. But if we reject right here, then I think we'll push higher into this imbalance. I like trading EA because of the pip count. I'm here for the pips, right? This little move right here is 150 pips. That's crazy. But in my opinion, the it didn't go as high as I would have liked for it, you know, like that's the only thing that bothers me. I wanted this to push higher into this imbalance, like to close it and then push down. But price is at a discounted rate. It passed the 50% mark and it rejected. So maybe it will start pushing down, because I do expect for this price to keep pushing to the downside. What I'm going to do is trade the sucker down. So we already got the bullish order block. Price should push back up into this daily and then sell, right? And I'm going to take that sell to the downside. That's the trade that I'll be looking for. I haven't heard ICT's Twitter space, Martha. When you say black swan, are you talking about like economic calamity? Yeah, that everybody's been talking about it. And listen, really, you should expect some economic turmoil. What we did was never done before. Like, we printed trillions of dollars. They just printed it, like on a computer, printed it up and gave it out. So, you know, it's like anything else. If you do that at your house, if you just go spend everything you make, and you buy whatever you want to, and you don't pay your bills, you should expect some turmoil. You know, the landlord gonna come looking for their rent or mortgage or whatever, you know, and your car payment is going to be due, and you got to buy groceries. So all we did was print and spend money during the recession. I mean, during the pandemic. So now we have to try to balance the books, and you know, like the chairman Powell said, man, like, no, he doesn't expect, I mean, for it to be a soft landing. It's going to be some turbulence. Just prepare for that. That's all we can do. All right. So you asked for UJ. Before you got here, I think we talked about, I think UJ is in a position to where it's going to buy up. I like UJ for at least this 166 pip move. I'm personally biased for it to move higher than 166 pips, but I think we can at least get those 166 pips. You know, we haven't moved up since we raised interest rates, and I think that's just because we needed to retrace. So I think it retraced. We show rejection here at the moving averages. I'm personally biased for UJ to buy up. I'm going to look for UJ longs, you know, this week. So those are, the two trades that I'm really interested in is UJ and EA. And, you know, the rest of it I'll play by ear. All right, if you want to trade the lower order blocks, I think AUD NZD has a 12-hour order block. I think EuroCAD has a 12-hour order block. I know y'all are probably like, man, it's still not low enough. It's Wyckoff playing out on a daily. So I expect for price to push down into this area and then go back up. If all things stay the same and, Euro raises their interest rate and the Canadian oil or the oil continues to crumble, I think we'll see a nice up move on EuroCAD. Listen, all that's not going to happen next week, by the way. All right, AUD NZD has a bearish daily, and it has a bullish 12-hour, which is pretty good. You can buy into the sell. That's a natural hedge position. All right, there's a bullish order block on AUD Chef. I would like to see AUD Chef retrace a little bit from this move. It really hasn't retraced at all since they raised their interest rates. So what I would really like to see is at least price come back up to this order block right here. I'm not trading this, but I'm just saying if you guys are trading, I mean, you can throw the fib on it, but it really hasn't had a good retracement. I know some of y'all were trading EG. We still have a upward pressure. Maybe there's about a buck 45, 100 some pips available. Maybe you won't get all of this move into that wick, but I think we're going to keep pushing to the upside. I think it has an 8-hour order block on it. Martha, US oil is going to tank, man. If you're trading oil, I would trade it to the downside. I sent you an article, Martha. I don't know how long it'll take for that to play out, but if we're entering a recession, or especially if it's a global recession, oil is really going to fall off. US all. That thing came and touched right in the imbalance and rejected. Okay, I think oil is going to come down to the recession news or whatever. All right, we have a bullish order block on the daily, and there's imbalance that needs to be filled. I can see it pushing to 113 before we start cooking with Crisco. I can see price pushing to this point before it sells. We got this recent break of structure. We got to find at least this imbalance, but it's probably an order block on the lower time frame. It's somewhere in this area. Yeah, there's an order block. So maybe it even goes to, where's my circle? Maybe it gets to this high. To this little area. Kindling.
Picking that one.
What's that?
Why you pick that one?
Well, I mean, it's an order block in there, you know. It's a down move, there's an up move. So you know there's an order block in there on some time frame. This is the imbalance. This is the order block. We broke structure to the downside. Price needs to come back up here. It looks like price is headed back up here for the cook-off. It's just the technical analysis coupled with the fundamentals there, shorty. All right, guys. Do y'all have anything else?
Cover the news this week.
What's that?
Cover the news this week.
Most important thing will be Wednesday. We have those central bank meetings.
Okay.
Wednesday at 8 a.m. over here.
Lovely. Thank you.
Lovely. So, you know, hopefully you guys come up with your plan, you stick to your analysis, stick to your plan, and everything will work out.
Thanks, Todd.
All righty. We'll see you guys tomorrow morning if you're going to do the smart money concepts.
Todd,
Yes, ma'am.
could I have the settings you use for your fibs?
For my Fibonacci,
Yes.
sure.
Thank you.
Let me see. Fibonacci. You see it?
Yeah. Okay, I got it. Thank you.
Ready? I'll talk to you guys next week.
Take care. Can you respond to my messages?
Yes, ma'am. I sure will.
Right. Take care, everyone.